While everyone is arguing about gold and silver, one metal just surged $78 in a single trading day. Palladium. As of mid-February 2026, it's sitting at around $1,678 per ounce. That's nearly double where it was trading at its 2024 lows, when you could pick it up for under $900. Russia produces about 40% of the world's supply. The European Union just delayed its combustion engine ban. Auto production is finally recovering after years of chip shortages. And here's the part that should bother you. Not a single major precious metals channel on YouTube is really covering this. Platinum got all the headlines in 2025. Silver broke 100. Gold hit new records. But palladium kept climbing, quietly and persistently, while nobody was looking. When you see why this rally is just getting started, you'll understand why the silence around this metal is the loudest signal of all. My name is Max, and this is Max Invests. I break down how money and markets actually work so you don't have to dig through the data yourself. We look at what's really there, not just the headlines. If you want to stay ahead of the market instead of chasing it, hit subscribe and like. It helps the channel more than you think. And stick around, because by the end, you'll see exactly why palladium sits at the intersection of supply concentration, geopolitical risk, and a demand catalyst that the market hasn't fully priced in yet. And there's a deeper reason this metal keeps getting ignored that has nothing to do with the fundamentals. I'll show you what it is before we're done. One quick question though, do you own any palladium, or is this the first time you've seriously looked at it? Drop your answer in the comments because I'm genuinely curious how many of you have this metal on your radar. Now, if you've been following precious metals content on YouTube for any length of time, you've noticed something. It's gold, 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 silver, silver, silver. Maybe a platinum video every couple of weeks. That's it. That's the entire conversation. And look, I get it. Gold has the sound money narrative. Silver has the retail stacking community. They have coins, bars, a culture built around them. You can walk into a coin shop and hold them in your hand. Palladium doesn't have any of that. There are no palladium stacking videos. There's no palladium community on Reddit arguing about premiums. It's an industrial metal that happens to be precious. And because it doesn't fit neatly into the gold and silver narrative, it gets left out of the conversation entirely. But here's the thing, the market does not care about your YouTube feed. The market does not care which metals have a fan club. The market cares about supply and demand. And right now, palladium's supply and demand picture is one of the most compelling stories in the entire commodity space. Think of it like this. Imagine you're watching a poker table. Everyone at the table is staring at two players, gold and silver, watching every move they make. But there's a third player at the end of the table who just quietly doubled their chip stack and nobody even glanced over. That's palladium right now. And the reason nobody's glancing over is about to become the reason everybody wishes they had. Because the supply side of this metal is a ticking time bomb. And I'm going to show you exactly why in a moment. But first, you need to understand just how concentrated this supply really is. What I'm about to show you next is the thing that separates palladium from almost every other metal on Earth. Pay close attention, because this is where the real story begins. Point number 1. The supply concentration is unlike anything else in precious metals. Here's what most people don't realize. 75% of the world's palladium comes from just two countries, Russia and South Africa. That's it. Russia, primarily through Nornickel, produces roughly 40% of global palladium supply. South Africa produces about 35%. Now think about what that means. You have one country under ongoing international sanctions with mounting operational challenges and declining ore grades. And you have another country that can't keep its power grid running. According to the World Platinum Investment Council's 2025 and 2026 data, South African mining operations continue to face the same rolling blackouts and energy instability that have been plaguing platinum production. Palladium comes from the same mines, same infrastructure problems, same bottlenecks. And here's what makes this even worse. If you wanted to open a new palladium mine today, you're looking at a 10 to 15-year development timeline before you see a single ounce of production. There is no quick fix for a palladium supply crunch. Recycling helps, but palladium recovered from spent catalytic converters operates on an 18 to 24-month lag from vehicle scrappage. So even that relief valve is delayed, which means the supply you have today is essentially the supply you're stuck with for the foreseeable future. And that supply is coming from two of the most geopolitically unstable sources on the planet. So much for supply. Now, the demand side. Point number 2. And this is where it gets really interesting. The demand side just got a massive shot in the arm that almost nobody is talking about. Palladium's primary use is in catalytic converters for gasoline engines, not diesel. That's platinum's territory. Gasoline. And what just happened in the European Union? They postponed the 2035 internal combustion engine ban. Let that settle in your mind for a moment. The single largest policy threat to palladium demand just got pushed back. Every year that combustion engines stay on the road is another year of catalytic converter production, another year of palladium consumption. But it's not just about the ban being delayed. Global auto production is finally recovering after years of semiconductor shortages that throttled output. Hybrid vehicles, which are the fastest growing segment in the auto market right now, still use catalytic converters. Every single one. And here's the kicker that nobody is factoring in. Tighter emission standards are coming, Euro 7 in Europe, China 7 in China. These regulations don't reduce the amount of palladium per vehicle. They increase it. More palladium per converter to meet stricter standards. So you have more cars being built, more hybrids on the road, a delayed phase out of combustion engines, and stricter emissions rules that require more palladium per vehicle. That's not one demand catalyst, that's 4 stacking on top of each other simultaneously. Point number 3. The price history tells you everything about where this is heading. In 2022, palladium hit roughly $3,000 an ounce. That was the panic premium when Russia invaded Ukraine, and the market suddenly realized that 40% of global supply was coming from a country at war. Then the narrative flipped. From 2022 through 2024, the story became all about substitution. Platinum was going to replace palladium in catalytic converters. Electric vehicles were going to eliminate catalytic converters entirely. Palladium was finished. The price cratered below $900 by 2024. A 70% collapse from the highs. And here's where the contrarian opportunity lives. That substitution narrative, it's running in reverse. According to recent data, palladium is now trading at around $1,678 per ounce, while platinum is at around $263. Read that again. Platinum is now more expensive than palladium in that comparison. Historically, that's unusual. For years, the argument was that automakers would switch from palladium to platinum because palladium was too expensive. But that logic falls apart when you look closer, because now palladium is the cheaper option. Some converter manufacturers are already beginning to rotate back toward palladium precisely because of this price differential. The substitution trade is reversing. The very narrative that crushed palladium's price is now becoming a tailwind. Point number 4. The broader platinum group metals rally confirms this isn't just palladium acting alone. On the same day, palladium jumped $78. Platinum rose 64 to around $263. Rhodium is holding steady around $10,300 per ounce. This is a sector-wide move in PGMs driven by real supply constraints and recovering industrial demand. When you see the entire group moving together, that tells you this isn't speculative noise. It's fundamental. It's structural. And structural moves don't reverse quickly, but why is almost nobody talking about it? That's the question I need to answer, because it reveals something important about how markets actually work versus how we think they work. The real reason palladium gets ignored has nothing to do with its fundamentals and everything to do with human psychology. We are drawn to narratives, not numbers. Gold has the narrative. It's the ultimate safe haven, the hedge against collapse, the ancient store of value. Silver has the narrative. It's the people's money, the affordable entry point, the industrial and monetary hybrid. These are stories. They're compelling. They're easy to tell. Palladium doesn't have a story like that. It's used in catalytic converters. It comes from Russia and South Africa. It's hard to buy physically. There's no palladium community, no palladium memes, no palladium stacking culture. And because of that, content creators don't cover it. Because content creators don't cover it, retail investors don't know about it. Because retail investors don't know about it, there's no audience for Palladium content. It's a self-reinforcing cycle of invisibility. But here's a hard truth that might sting a little. The metals that get the most attention are not always the metals that make the most money. In fact, the opposite is often true. The most crowded trades are the most picked over. The least crowded trades are where the inefficiencies live. And Palladium right now is the least crowded trade in precious metals. It's nearly doubled from its lows and nobody noticed. It jumped $78 in one day and it didn't trend. That's not a weakness, that's an edge. Because by the time something trends, by the time everyone is covering it, the move is largely over. You're buying at consensus, which means you're buying after the smart money already positioned. There's also an institutional angle worth understanding. Palladium ETFs exist, but they're thinly traded compared to gold and silver funds. The futures market is active, and mining stocks like Sibanye-Stillwater and Impala Platinum offer indirect exposure. But the thin trading itself is a signal. Low liquidity means that when institutional money does flow into this space, the price impact is amplified. A relatively small amount of capital can move Palladium's price significantly, which is exactly what you saw when it jumped nearly 5% in a single session. If this breakdown is helping you see the big picture, hit subscribe and turn on notifications so you don't miss the next time we connect the dots on money and markets. And drop a comment telling me what you want to see next. Palladium, gold, platinum, auto recovery, supply chain risks. The topics you ask about become the videos I make. Now let me tie this together, because the individual pieces are interesting, but the system they create is what matters. You have a metal where 75% of global supply comes from two geopolitically unstable countries. One is under sanctions with declining ore grades. The other can't keep its lights on. New mine development takes 10 to 15 years. Recycling operates on a 2-year lag. That's the supply side. On the demand side, the EU just extended the life of combustion engines. Auto production is recovering, hybrid vehicle sales are surging. And tighter emission standards mean more palladium per vehicle, not less. The substitution narrative that crushed the price has reversed because platinum is now the more expensive option in that dynamic. And the entire PGM sector is rallying, confirming this is structural, not speculative. Remember that poker table I described earlier? The player nobody was watching just doubled their stack again. Palladium has gone from under 900 to 1678, and the table still hasn't looked over. The question you need to ask yourself isn't whether Palladium is a good investment. I'm not your financial advisor, and this isn't financial advice. The question is whether you're the kind of investor who only pays attention to what's trending, or the kind who pays attention to what's actually moving. Because in 2022, Palladium was at 3,000, and everyone was talking about it. By 2024, it was below 900, and everyone forgot about it. Now it's at 1678 and climbing, and the silence is deafening. Every single time the crowd shows up late, they buy the narrative after the price has already moved. They celebrate metals after the rally, not before. You're watching this video, which means you're seeing this before the crowd. What you do with that information, that's on you. Your future self, the one looking back at this moment from 12 or 18 months down the road, will either thank you for paying attention when nobody else was, or wonder why you scrolled past the one metal that was screaming opportunity while the rest of the market was distracted by shinier objects. Palladium, gold, platinum, the auto recovery, supply chain risks. Whatever is happening in these markets that you want me to dig deeper into, drop it in the comments. Tell me what you want to see next, because the topics you ask about become the videos I make. And if you want more videos like this, breaking down how money and markets actually connect, subscribe and hit the bell so you don't miss the next time we connect the dots before the headlines do. While you were watching gold break records and silver make headlines, Palladium quietly nearly doubled. No fanfare, no trending hashtags, no community rallying behind it. Just supply constraints, demand catalysts, and a price chart that doesn't care whether anyone is watching. That's the setup nobody sees coming. Now you see it.